All right, what's up, guys? How we doing? Welcome, welcome. Someone want to give me a thumbs up if you can hear me okay? Thumbs up if you can hear me okay? Is it echoey? Does it sound okay? Please let me know in the chat if you can hear me. Anyone? Anyone? Hello, hello, hello. Can you hear me okay? Hello. Hello. There we go. Is it too loud? Is it too All those messages came through delayed. That's funny. Is it too loud or is it okay? Let me know. I can turn it down. Volume. Good. Sounds like we're good. All right. Well, someone tell me if you can't hear me or if it's echoey or something's going on. But perfect. Love it. Welcome in, guys. What's up? I'm excited to show you guys today's location, a little different. Um, maybe a click sounds good, baby echo. Well, I am in a hotel room, so can't ask for per. It's not my studio with my studio equipment, but we do got a decent little mic here, so hoping that the mic does its job. Got a little light right here. I'll show you guys my whole setup here in just a second. Again, welcome in, guys. Thanks for being here. Day two, as you know, we're gonna start at 6:03. Give everyone 3 minutes. Um, man, we had everyone say where they were from or where they're tuning in from yesterday. What should we ask today? Let's go ahead and throw into the chat what's on the menu for dinner tonight. What is on the menu for dinner? Whether you had it or you're about to have it. Let's see those dinner. Oh, chicken pot pie. That sounds nice. I'm a huge foodie, so I'm actually really excited about this. Pizza, love it. Rolled beef tacos, hell yeah. Chicken parm, one of my all-time favorites. Lasagna, chicken and rice, orange chicken, homemade chili. I've had some really good chili the last couple of weeks. Tamales, ribeye, proper tacos, late night 4 ounce salmon and steamed rice, honey shrimp bowl, Mediterranean Thai food, fried fish, obviously from Hawaii, right? Is that where we're coming in from? Hawaii? Hawaii? Soup of sadness. Well, that doesn't sound very fun. Hopefully, the soup of sadness is helping cure sadness. Unless that's the name of the soup. Is that a thing? I don't know. I have no idea. Welcome in, guys. Welcome in. All right, here we go. Numero 603. We're ready. Let me give you a quick little show of what's going on. So here's the room. Staying in. There's a little camera there. Um, just want a little snippet. I'm actually going to turn that off real quick. Get a little snippet. See a cool room. And then turn around here. Got some got some golf on. We've got some fireplace action. Chilling. Chilling. Staying up in Midway, Utah. For those familiar with the area, Midway, Utah is where I'm at right now. Love it up here. All right. Well, if everyone can hear me, 6:03, I think it's go time. Let's go ahead and get started. Yep, Swiss days, exactly. Stefan, that's my home. Well, there you go, dude. Love it up here. All right. So welcome to day two of our live 3-day challenge. Boy, we got a lot to get over. Not a lot to get over. We got a lot to get through and go over. A lot to get over. That's funny. So today, gonna be going over a lot of good things, but let's just ever so quickly review. Let's recap yesterday, what we learned. What did we learn? Hope you guys can see my screen okay as well. I'm assuming so. Can you all see this? I'm sure you can. Perfect. Okay. So yeah, yesterday, what did we learn? Well, we learned that the stock market is a marketplace where you can buy pieces of companies that you like. That's stock, shares, equity. If you want to rent those shares, essentially having 100 contracts at a discount or 100 stock shares at a discount. That's an option contract. We buy calls if we want the market to go up. We buy puts if we want the market to go down. And those contracts move a lot more as if we had 100 shares of that stock, but they discount it for us, which is really, really cool. Futures, trading the overall market, sectors, right? NASDAQ, S&P 500, things of that nature. And you can still buy and, want a stock to go up and get benefit, or, short a position or sell, make money when a position goes down or when the underlying asset goes down. So today, boy, oh boy, what are we going to go over today? Well, today we're going over a few things. We're going over what we're looking at here, the charts, right? So what we're going to be talking about is candlesticks, support and resistance, key levels, kind of the same thing with there, EMAs, trend, and we're going to teach you one of our strategies. So buckle up, ladies and gentlemen. We are going to cruise through this. As always, I would love to sit here and explain these super in depth, answer every single little question you guys have. We will have a Q&A at the end, so hang on to your questions till the end, unless I ask if you have questions about that topic. But the goal is to get through all this today and give you an understanding of how it all works. Again, in our Mastermind program, things of that nature, we really dive into all this and actually show how to apply these things over time, practicing all those things. But you guys get to see that a little bit tomorrow too for free, which is really cool. Joining our live trading session. Again, it's going to be at 7:30 a.m. Mountain Standard Time. Really excited to do that, implement what we see in the markets and have you guys follow along. Whether a win or a loss tomorrow should be great. See you, so you can see, one, how proper risk management is deployed, or two, how a winning trade is taken. So with that being said, again, stay with me. We're going to cruise. Really trying to condense a lot into 1 hour sessions. So without further ado, I think we're ready. Take notes, grab your favorite beverage. It's one of those days. We got a coffee here at 6 o'clock at night, whatever. Let's party. Let's rock and roll. So candlesticks. Okay. Here's what we're looking at. What are candlesticks? Well, candlesticks is essentially telling us a story of price action, okay, of what the stock is doing. I'm actually going to remove these lines real quick or hide them so you guys really don't get confused. We are just looking at the candlesticks. Now, on my chart, right, these blue candlesticks are selling candlesticks. The green candlesticks are buying. Most people have red for selling, green for buying. I'm a huge proponent in keeping a calm, cool demeanor while trading. What does red induce? Fear, anxiety. Right. It's like the guy from Inside Out, right? The rage that just takes over. And what's blue? Well, on top of sadness from that movie, blue's more of a calming, a soothing, equilibrium, right? Chill. So I don't like seeing a bunch of red on my screen. That's why it's blue and green. If you want more answers to that, you're not going to get them tonight. Okay, so again, these candles, okay, they appear as day traders. We trade on the 5-minute chart, okay? So there's lots of different charts that you can have to set up, what you're looking at. So if you want to see what candles look like every 1 minute, you can go to the 1-minute chart. If you want to see what they look like every 5 minutes, you can go to the 5-minute chart. And again, we are looking at right here, the 5-minute chart. So that means these candles are appearing every 5 minutes. So when the stock market opens when, this gray area turns to black, which is at 7:30 a.m. Mountain Standard Time. All of this is what AMD price did during the day, the stock, right, of that company. And then you can see the stock market closes here at 4 p.m. Eastern or 2 p.m. Mountain Standard Time, okay? So now, as we can see, when the price opens right here, if price drops for those next 5 minutes, it shows as a blue candle, okay? And then the next candle appears, and you can see it's blue again. So price dropped again. And you can see today, for 1, 2, 3, 4, 5, 6, 7, 8 straight 5-minute candles, AMD stock dropped, which was kind of crazy, right? So that's what we see happening when a price is going down on a stock. And then when we see a green candle, it shows that price is going up. Now, again, these green candles are much smaller than the sell candles, right? Showing that just even from the candle size, the buyers were weak compared to the sellers today. Now, a few things about the genetic makeup or the DNA of the candles, okay? When a candle opens, right, it's going to open at the bottom of the blue candle body. There's two pieces of a candle. There's the candle body, which is this, the bar, and then we have the wick, which is this. And the wick shows where price got to at one point, but then came back up. So as an example, okay, I'm going to make it really simple for you guys. You can see the bottom of this candle's right here. Boom. At 7:30, price opened right here. Okay. At one point, price dropped all the way down to here, started to come back up, and ultimately, after 5 minutes, the price closed right here. So the AMD price, if we look over to the right-hand side, you can see 251.77. After 5 minutes, price was at 251.77. Boom. New candle appears right here, right? So then over the next 5 minutes, again, drops down, pushes up a little bit, maybe push up here a little bit, ultimately closes after 5 minutes there, next candle appears, okay? Again, I would love to dive into this more, but that's a pretty good explanation just of how the price action works. So now with a green candle, so again, bottom of the blue candle body, boom, next price appears, and we finally get a candle that pushes up over those 5 minutes, and it closes right here. So now, on a green candle, price appears at the top of the green candle body on the next candle, okay? So you can see throughout the day, price does that, right? New candle appears, it kind of moves around, goes on, goes on, goes on. What you're seeing right here and here is pre-market, aftermarket. We don't trade that. You can't trade that. Trading options, you don't need to stress about it, don't need to worry about it, but that is the pre-market and aftermarket. We use those levels as information, but we'll talk about that here in a little bit, okay? So now that we know how to read, right, kind of direction of the candles, a green candle, again, shows that buyers won over those 5 minutes, and a blue candle shows that sellers won over those 5 minutes. And again, most people it's red. For me, it's blue. Now you can just, based on that information alone, if we look at this designated section right here, who is in control for the first hour, right? From 7:30 to 8:30, who is in clear control based on these candlesticks? Sellers, right? Obviously. Good job. We did it. Identified sellers. So again, what we see here is strong candle bodies, right? Meaning there's some wicks that occur, and a wick, again, shows that price, got to a certain point, and then during that same 5 minute pushed up, ultimately closed here. And you can see throughout the day, there wasn't really any big wick areas, but you can see as an example here, right? It shows price pushed down, and buyers were like, nope, during this 5 minutes, we don't want it to get below that. Next candle appears, dip down again a little bit here, and they're like, nope. Try it again, and then right here, try it again. Buyers were like, nope. And so we could see, right, there's a level there. We'll talk about that here in a second. And then ultimately, boom, we got a decent little move happening after that. So that's how you can use a wick to identify certain things. And again, it just shows where price was at one point during those 5 minutes, but then where the price closes, again, is the bottom of the candle body on a blue or sell candle, and where the price closes on a green candle is at the top of the candle body. And again, that shows how much price moved actually and closed before the next 5 minute candle appeared. Now, why do we use the 5 minute candle, you may ask, or as opposed to other time frames? Because it makes the most sense day trading the way that we trade, right? We want to use and see data in 5 minutes. If I was a swing trader, which just means like I'm holding contracts or I'm holding positions for multiple days or weeks, which I really don't like to do, then I might look at a chart that's like the 1 hour time frame, right? So again, as day traders, we could spend an entire class talking about this. We use at Uncommon Education Trading the 5 minute time frame. Sometimes the 1 minute, but majority of the time the 5 minute. Okay. You don't need to overthink candles. Okay. What I want you to really focus on is green shows strength, right? During that time period. Blue shows sellers or weakness during that time period. Okay. And so that helps tell a story, because if you were just looking at a line, right, on a graph, like most people think of a stock chart, right, just a line, yeah, it shows which way the price is going. But when you can use, like we saw here, that, hey, buyers kind of respected this level. They didn't want price to go back down. So, maybe that's going to help us get an idea of what's going on. Or here, price pushed up, rejected here again. And then when we finally broke above it, well, then we actually got a little bit of a move up, right? Again, it's kind of like telling a story in real time or giving us clues in real time. So with that, now let's talk about what support and resistance means, okay? The simplest explanation for support and resistance is support is where price tends to bounce off of, right? So if price is dropping, hits support level, bounces up, that's a support, and a resistance is if price is rising up to a level that then sellers reject, that's a resistance, okay? So let's give a few examples here on this chart. So right here, we were just talking about this, right? During this period, after we got these bounces here, right? Let's call this key level where we just kept bouncing off of here. Would this be a support or a resistance? Price drops down. Is it interacting with a support or a resistance here? Support. Again, because support is the floor, resistance is the ceiling. Okay. So now let's go ahead and remove this. Or actually, what I'll do is I'll just holy moly, come on. Zoom out a little bit. Let's go ahead and activate this. Activate. Okay. So now let's use this area. Okay. So we see here earlier in the day, cool, price failed to get above this level here, and then it dropped. And then as price later in the day, what happens? Price comes back up to this level, and oh, what do you know? How strange, right? What happens when price interacts with that level? It rises up, and what does it run into? What's this now? This level, this key level? Is this a support or resistance? Resistance, exactly. And whenever price runs into a support or resistance that hasn't been touched yet, we anticipate that it is going to bounce off of that level. So it's going to reject off of resistance or bounce off support. Now, that's not a strategy, and we're never just going to assume that blindly, but that's the general rule of thumb. Okay? What I love about support and resistance, guys, is it's very simple. Anyone can identify it, right? So as we can see here, when price dropped down to right here, okay, we saw multiple attempts to get past this level, failed to do so, and it hasn't been touched yet since it bounced off that. So going into tomorrow, guess what? That's going to be a key level that we'll want to watch out for because we say, hey, sellers weren't able to get past that level. Maybe it's going to bounce again. Maybe if they do get past, then it's going to continue to go down, right? But that is, again, we could spend so much time, but that is the essence of what support resistance is. Support is an area where buyers were like, nope, we don't want price to go below this. Resistance is an area where sellers are like, hey, we don't want price to get above this. No, thank you, right? So that is, in essence, support and resistance. Now, we're going to get into the sauce, okay? We're going to get into some of the sauce. Now, these are things that are pretty, not exclusive to Uncommon Education Trading, but these are key aspects of what we teach here at UET are going to be these next pieces. So I'm really excited to go over these with you guys. Again, trading is simple. Don't be surprised if what we teach you is simple. That's the whole goal, right? If it seems like, oh, this doesn't seem too crazy, then I'm doing my job and we're doing a good job, okay? So here we go. The 4 key levels. There are 4 key levels we like to use trading options here at Uncommon Education Trading and futures for that matter. And those key levels are as follows, okay? So number 1, we're going to look at this day right here because this is yesterday, right? So we want to identify the previous day low and the previous day high, okay? Sounds exactly like what it is. Just find the lowest point of the day. So this perforated line to this perforated line, this is the whole day. Pre-market, the market, which is the New York Stock Exchange hours, aftermarket. So we find the low, we find the high, got them, okay? So then we also want to identify the pre-market high and the pre-market low, okay? Pre-market low was right there. So these 4 levels are what we trade. Again, pre-market is from this perforated line over. So once the market's about to open, we can identify, cool, here's the pre-market high, here's the pre-market low. Within the Uncommon Education Trading community, I have a indicator that everyone in our community gets where it automatically plots those levels for you each day. So it's really cool. You wake up, they're there on your chart. It's very, very cool. Okay. Toma, we just nailed it. Yep, that's exactly it. That's really funny. So in this particular example, the only time we intersected isn't even a word. The only time we intersected with the level was very briefly with the pre-market low because price zoomed down right off the bat and never really saw it. But let's use another day. And again, I have not done any pre-market looking at this. So let's just use a few examples and see what we can gather from that. So again, let's say that we're trading this day right here, okay? Following day, so we look at the previous day low right here. We look at the previous day high right here. Ryan Flynn says hello. Hello, Ryan Flynn. Welcome. And then we have the previous day, or sorry, the pre-market low, which is right here, and the pre-market high, which is right here. Okay. So again, we are looking, this is the previous day right here. And let's say the stock market's about to open and we have those key levels mapped out. Okay. Well, as we can see, here's what's so cool. Right off the bat, okay, price pushes up, touches this pre-market high. Okay. And what did it do when it touched that pre-market high? What do you guys see based on what you just learned about candles? This candle right here, it touches that pre-market high level. What happened? What happened during those first 5 minutes of the market being open? It rejected, right? And how do we know it rejected? Well, we see that price opened right here because again, we know that price opens on the next 5-minute candle where on a green candle at the top of the candle body. So price opened right here. And at some point during those 5 minutes, it pushed up. May have looked like during those 5 minutes, buyers were in control, but then what happened? Very quickly, right? Sellers were like, nope, right? No, no, no. Kembe Mutombo, no, thank you. Starts rejecting. Got all the way down here, pushed up a little bit, but ultimately that 5-minute candle closed right here, which shows that not only did we drop right off the bat, but we also, what? We rejected a key level. We rejected a resistance, right? Because again, this level is above where price was at. It pushed up and we saw a rejection of that level. So if we see a rejection of that level, using logic, what do you think we can safely assume is going to happen, at least for a little bit? If we see a rejection of a key level, what do you think we're anticipating to happen? Yeah, we think it's going to continue to go down, right? We think for some level of certainty that it is going to continue to drop. And exactly what did we see? Boom. We saw that drop. Beautiful move to the downside there. Okay. So those are the 4 key levels we use. Now, again, do we trade off of other levels and use other levels? Absolutely. But each day, when I'm sending out potential plays to our members or I'm live trading, as you guys will see tomorrow, I am only wanting to trade when price interacts with these key levels. Now, why do you think I want to wait for price to interact with these key levels before I take a trade? Because if price interacts with the key level and we see a rejection, well, it's really easy for me to then use a few other pieces that we're going to discuss here in a second to say, hey, I think it's going to continue to go down. Or, right, if we see price break below a level, okay? So if we're looking at a support level and we see price break through that level, do we think it's going to hold and bounce anymore? No. Think about it like this. Think if you're on the second story of a house, okay, and you're the floor. Well, that floor is the ceiling for whoever's on the first floor. Okay, so imagine you're on the second floor and you fall through the floor. Are you just going to like kind of barely fall through? No, you're going to fall until when? Until you hit the first floor. And so when we break through a level, we know, hey, this is more than likely going to drop until what? Until the next support level. And again, I have not done any, work into this of identifying this, that, the other, but we can see right here, okay, price dropped down and came back up, right, pretty quickly, after this kind of big, what we call an impulse candle here. And that also, right here, intersects with an area from the previous day right here, right, a low area where those candle bodies bounced. So let's go ahead and mark that as, cool. There's a next key level that's kind of, down from there. And look what price does, okay? Price comes down, intersects with that key level, and what does it do? Bounces off that key level, right? So when you understand support and resistance, it becomes really easy saying, okay, well, yeah, we think it's going to drop, but how much further do you think it's going to drop? Well, we don't think. We say, well, we know if it gets past a certain level with confirmation, right? Kind of like what we're seeing here. And there's a lot of different aspects that we're going to go over here tonight. We believe that price is going to go where? Until the next key level, until the next support. And so it becomes really easy to map out your game plan as a trader. You're not just holding and be like, oh man, how long should I hold on? Like, should I get out now? Should I wait? No. What do? You wait for the take profit level or the next key level to take profit. Okay? So those are the key levels. Now, let's talk about EMAs. Okay? Again, do I want to sit here and talk so much more about these and go over everything with you guys? Yes, I would love to. But guess what? We're on a time crunch. We got to be flying. It's 3 days. I got 3 days to give you 9 years of knowledge. It's tough. Okay. So we're moving on. We're moving on to the EMAs. Okay. What the EMAs are, okay, are the exponential moving averages, okay? Exponential moving averages. So what the exponential moving averages are, the EMAs, they are these blue and pink lines that appear in real time with the candle. So these lines aren't just there on the chart. With each 5-minute candle appears, they are appearing, okay? So what EMAs are is it's helping to identify what trend is going on intraday, okay? So maybe before we get into trend or EMAs, I'm going to pull a quick little audible. I'm going to teach you guys about trend first because I think that'll make these EMAs become a little easier to understand, okay? So we just identified support and resistance and the 4 key levels we like to trade. Now let's talk about how to identify a trend. Now we talked about this yesterday, right? Doesn't take a genius to look and say, okay, this day right here, was this day an uptrend day or a downtrend day? What you're looking at on my screen right now. Uptrend or downtrend? Up. You got it. Okay. Now, next day, is this day an uptrend or a downtrend day? This day right here. Down, right? Okay. So how do we actually know, right? It's like, yeah, you can look at it, but how do we actually identify? So when we're looking to identify if a stock is in a trend or not, when we're looking at an uptrend, okay, you need to identify a low point where price bounced off of, okay? So we can see right off the bat when the market opened, we had a low point, price then went up, and then it actually started to come back down, but it created what we call a higher low, okay? So what that means is here's a low point. This is also a low point because this low point happened, right, after price had dropped from a high, but it bounced and pushed back up, and this low point is higher than this low point. So the easiest way to identify a trend is you identify a higher low, okay? Higher low point. This low point is higher than this low point. Hopefully that makes sense. And then with your trend tool, you just simply identify, intersect with those two, and what do we see? A beautiful uptrend, right? Isn't that cool? So once you identify a low point, higher low point, intersect those two, boom. As long as price stays above this line here, we are in an uptrend. And for the majority of the day, we did just that, right? It even got down close to it and bounced off of it. Just acts similar to like a support, right? Like we just learned. But then what happens? Okay, we break below that trend line, and then the next day, right? A huge example of that. It cruises to the other side. So now how do I identify a downtrend? Well, just like we identify an uptrend, in a downtrend, okay, we are looking for lower highs, okay? So let's use this day as an example. Okay, we get to this point right here. Let's say we see, okay, here is a high point. Price got up to here, rejected, and started tanking. Cool, so that's a high point. We then see an additional high point here, right? But is this high point lower than this high point? Why, yes, it is. Thanks for asking. So now what do? Intersect, intersect, and boom, we have ourselves a downtrend, okay? And price will stay in that downtrend until what? Till it breaks above. And oh, what do you know? When it broke above here, what happened? Big move to the upside, right? So that's how you identify a trend. It's very simple, right? Obviously, one, you look at it, it's in an uptrend. Great, you got it. But if it's in a downtrend, right? Great, you got it. Now you know actually how to do it from a technical perspective, right? Low point, higher low point, uptrend, high point, lower high point, downtrend, okay? Now, the old adage when trading is the trend is your friend, okay? So just based on that stupid little phrase, the trend is your friend. If we are looking, thank you, Jermaine. And you know what? This is why I'm, I tell people, like, look, I am not the best at everything. I'm very good. I'm going to be very hard pressed to find someone who explains all this more clean, more simple, more easy to understand than me. And I have no problem telling you that, right? I actually do that, so I appreciate that. Thank you. But going back to what we were talking about, the trend is your friend, okay? So if we identify we're in an uptrend, a little pop quiz for you guys. Do you think, if we're in an uptrend, do you think that we should be looking for call opportunities or we should be looking for put opportunities? What do you guys think? Calls. And why? Because the trend is our friend. So if we're in an uptrend, we anticipate price to continue to go up as long as what? Price stays above that trend line, right? So yes, if you're wanting to buy puts, then you would wait for a break of that trend. But as long as we are in that uptrend, we should be looking for calls. Why? Because the trend is your friend, right? Now, let's talk about puts. When should we be looking for puts? Well, when either we're in a downtrend, which we identify here, right? Cool. Let's look for puts if we're in a downtrend, or when price breaks an uptrend, which we see here. Okay. So again, very, very easy to kind of put those two together when you see a trend. So again, what do you think that we're looking for? Well, now, don't want to blow your mind too much here. We still got a lot to go, but little snippety snippet is, let's say we got pre-market high. Okay. Remember, that's one of our 4 key levels, the pre-market high. Okay. So the pre-market high is right here. Great. Well, we've got the pre-market high. We're in an uptrend. Okay. So if we're breaking above a resistance, see where I'm going with this? If I break above a resistance, okay, and we're in an uptrend, that's giving us multiple reasons to believe that what? Which way is price going to go? Right? So you remember how I told you we're going to learn kind of brick by brick, line upon line, and we're going to kind of combine them together? Well, that's what we're starting to do here. Okay. So that is how you identify a trend: higher lows for an uptrend, lower highs for a downtrend. Okay. Moving on to the EMAs. Let's get into it. Want to make sure we get through tonight so we can give you guys the strategy, and we are doing very good on time right now. Very, very good. Okay, very quickly, the EMAs. What these EMAs do is they are exponential moving averages. Okay, that's what their actual name is. They help us see direction. Okay, it's like a real time, and again, I could get super technical and try to impress you with all the big words that I know when we're talking about EMAs and how they work. But what I'm going to tell you tonight, the easiest way to use them and understanding is they are intraday, or intraday just means during the stock market hours. Okay, that's what intraday means. Intraday support and resistance and trend identifiers. Okay, so if we see price continually bouncing off these EMAs, it's above it, comes down, bounces off, bounces off, bounces off. Well, that helps us understand even more that what? We're in an uptrend, right? That price is going up. Can we now think, okay, well, if these are appearing in real time, right? The 9 and 21, that just talks about the lengths. The other way I'll describe the EMAs, that may be a little bit different from what some people do, is this is where price is quote unquote supposed to be. Okay. So if the purple and blue line is kind of where price is supposed to be and we're well above it, that means that there's a lot of buying interest, right? So price is, pushing it up, but it also means that it might be overbought, right? Or it might be, kind of overextended, where we always believe that price is going to come back to these EMA levels. Okay. And we'll talk about that with one of our strategies that we are discussing. Okay. So to humor me once again, let's say, and I know it's not exactly here, but let's say price, okay, or let's say that this is a key level from a previous day. Okay. I know it's probably not right now, but let's say this is a key level from a previous day. Well, when we see price rising up to that level and we see some distance starting to occur between the 9 EMA and where price is at, well, we know if there's distance between, that means, okay, it's overbought, right? So that means at some point, price is going to come back down to these EMA levels. Well, if price is rising and it's extended from that EMA and we run into a resistance and we start to see rejection occur, again, that is multiple signs or multiple ways for you to identify and see that, hey, maybe price is going to reject off this level, right? You can see how all these little things are helping. What we use EMAs for here at Uncommon is, again, a way to identify entries, a way to use or utilize a stop loss, which we'll talk about here when we talk about our strategy from today. And it's a way to know when to stay in a trade or when to get out of a trade, right? Because again, it's giving us real-time data as far as what's going on the stock. So the 9 means it's taking into account the last 9 candles. That's where price is quote unquote supposed to be. And over the last 21 candles, right, price should be there. So to really just make it simple for you guys, when you have these on your chart, think of them as a real-time kind of trend identifier or intraday support and resistance based on price, right? So you can see if price keeps bouncing off these EMAs, well, the EMAs are acting as a support, right? And so maybe, right, and we're actually going to talk about this here in a second, maybe you identify, cool, we're in an uptrend. I see that. I want to, enter and buy into a position. Well, if this is acting as a support, okay, another little pop quiz, make sure you guys are awake with me here. If you wanted to buy a call, okay, meaning you thought price was going to go up, and with the same principle, we don't want to enter when price is extended from a support level, as an example, okay? If someone's saying, hey, we want to enter as close to a support level as possible because we think that's where it's going to bounce, right? But we need confirmation, right, whenever it's going to enter because price is in our support level. But as price is moving up in an uptrend and it's kind of pulling back towards those EMA levels, if we see that that's support, because again, it's an intraday support level, is holding, would this be a good area to enter a call position at that support? Well, the answer is yes, right? If we see price in an uptrend moving up and it is holding any support, whether that's a key level, EMAs, then that is a good sign that we believe to some certain extent price is going to continue up. Okay, so that's all we're going to get into with EMAs tonight. Again, it's a moving average. It's a real-time support or resistance if price is below those EMAs, like we probably saw today, right? It's the same thing. Look, it just never gets below that EMA. So let's say, okay, your key level, next key level is here. Let's say you break below a key level right here and you decide to enter puts right here, right? And you remember saying, okay, Jeremy told me I hold on to that trade until the next key level, okay? Well, as price is coming down, it starts pushing back up against you, right? And you're like, oh no, like, should I get out? Like, is it going to bounce out of here? Well, what do you think you could use? Well, you could say, well, as long as price stays below the 9 EMA, you are good to hold that position until what? It hits that key level, okay? And then if price were to break above that EMA, right, then it shows, okay, buyers have broken past a resistance, and we believe, at that point, it could continue to go. So you can see how this could help you manage a trade, right, which is really fun. Again, all of these concepts and things, you guys, we go into extreme detail in our Mastermind program, and I show you how to do this and how to make money from implementing these things. Okay, so that's all we're going to go over regarding EMAs. I don't expect you to fully understand what they mean other than, cool, it's an intraday support resistance kind of trend spotter, right? That's what we're using it for tonight's examples. Now, let's talk about our strategy, okay? Love this, okay? Volume, okay? Volume right down here. By the way, giving you guys sauce, a trading strategy that I've spent 9 years developing and building. I mean, it's pretty cool for free. Right? Not too shabby. Again, it's nothing crazy. It's nothing groundbreaking. It's not some magical 8-ball that I'm like, calls or puts. No, it's technical analysis. Let's get into it. Okay. So when we are looking at the rally-based rally strategy, okay, there's a few elements we're going to talk about. I want to spend 2 minutes talking about volume. Okay. Volume, these are these blue bars that you see down here. Okay. Now, there's a lot to go up. We could discuss about volume relative to each stock, what's going on. But here's all I want you to know is that if price is rising, okay, speaker just went down. Give me a second. What's going on? Hello. Still hear me okay? Thumbs up. I don't know what just happened. That was weird. Thumbs up. Okay, cool. We're good. Weird notification popped up. Volume. When price is going up and we see volume sustained or increasing. So literally just looking at these bars right here. If price is rising, okay, price is going this way and volume is rising, then there is strength behind the move. Okay, think of volume like gas in the tank. Okay, so you have this brand new Lamborghini, you're excited, can go really, really fast. But guess what? If there's no gas, it's not going anywhere, right? So again, if price is increasing, this is one of the most valuable things you're going to hear this entire 3 days. If price is increasing and you see volume increasing, meaning volume bar by volume bar, price increasing, that means that there is strength behind whatever move that's going. So if that's buying pressure and increased volume or selling pressure and increased volume, it means there's strength behind the move. And we see that, right? 3 increasing volume bars, 3 buy bars. and we see what? Price continued to go, okay? Now, in other examples where we see, hey, let's say right here, buy candle, okay? Volume's right here. And then this next buy candle, what is volume doing? Well, price from here to here is increasing, but what is volume doing? Volume is decreasing. God, I can't believe we're giving this away for free. If price is rising and volume is decreasing, do you think there's strength behind that buyer's move? Is there strength behind the buyer's move? No. It means there's weakness, because guess what? There's no gas in the tank, right? It's like a car trying to climb up the hill, right? So again, what happens? Look what happens. I'm not making this up, right? This is real talk here. This is learning the matrix code, right? This is learn how to read a language. Price drops pretty immediately falling, right? So again, volume, that's all I want you to know from tonight. When price is rising and volume is rising, good chance it's going to continue to go. If price is rising but volume is decreasing, be careful, right? Again, volume is how you can actually know what's going on in the market. Now, there's a lot more to that. Don't just go enter a trade because you're like, oh, Jeremy said this. There's a lot more to that, right? We're talking about influxes of volume. Sometime an influx of volume, okay? What is an influx of volume? An influx of volume is a volume candle that is abnormal compared to the most recent volume candles, right? So we can see here, volume's kind of hanging around right here, and then boom, all of a sudden this big volume candle, right here. And even though it's a big green candle and big volume, you're like, Jeremy, it's rising volume. What happens? It rejects hard, right? And this is called liquidity sweep. We will not go over that tonight, but that's a huge thing to be aware of when trading. This is something we go over in crazy detail in our mastermind program, okay? So now let's get back to the strategy. Again, all I need you to know is that price is rising or decreasing and volume is increasing. There's strength behind the move. If price is rising or decreasing and volume is decreasing, there's weakness behind the move, okay? So the rally-based rally strategy, it's so simple. It's a continuation type of move. So what this means is if we're in an uptrend and we want to look for an opportunity to enter calls, okay, we need to identify an initial rally. We want to find a base to enter, looking for the next rally. So think of it in three parts. We need to identify a rally. We want to enter in the base, and we're looking for the next rally. Okay, so let me show you what exactly that means. Okay, perfect example of it here on this day. Okay, so our 4 key levels, beautiful. Got our pre-market high, pre-market low, previous day high, previous day low, whatever, right? And I'll map those out just so you guys can see. Previous day high right here, previous day low right here. Great. Okay, so right off the bat, price breaks above a key level. Okay, and it's a rally. So what is a rally? A rally is a strong buy candle or a strong sell candle, right? We want to identify an initial rally. Okay, so we're not looking for rallies later in the day. We're looking for initial rallies. So if price is sideways, then boom, big green candle, or price is going, kind of sideways, then boom, a big sell candle. Either way, we are looking for an initial rally. Okay, so step 1, identify a rally. Well, we got it. And what's a rally? A big green candle or a big sell candle. Ideally breaking through a key level. Okay, so this is a great rally because what do we see? Big push up, price closes above this resistance area, looking good. And we're in an uptrend. And we know we're in an uptrend. Why? Because here was a low point, here's a higher low point, right? I'll even draw the trend line for you guys so we can see it like so. Bang, okay, in an uptrend. So we break above that key level. That's step 1. Now, step 2, what's the second part of the rally-based rally? The base, okay? So what's a base? This is the pullback. So think about it like this way. You know how they just came out with these like new humanoid robots? Do you want to be the first, like just for like effectiveness of the robot? I know it'd be cool to have one of the first ones, but these humanoid robots that supposedly clean your house and do all your dishes and all that. Are you going to be better off waiting for like the second, third, or fourth version or the first? Which is going to be better, do you think? Probably the third or fourth version, right? Because again, first one, I don't know, is it any good? Is it going to try to kill you in your sleep? We don't know, right? Because those first buyers are going to find out. But what we're looking for here is we never enter on that initial rally. Now, why don't we just say, Jeremy, there's a big green candle, we broke a level. Why wouldn't we just buy calls right there? Well, my friends, I'll tell you why. Because sometimes that big green candle is a fake out. And what happens? Boom, price rejects, right? Again, big green candles like we just went over, right? Looks great. Boom, it rejects. So we never enter on that first rally or on an initial break of a level. Why? Because the market is smart. The people controlling what's going on right behind closed doors of hedge funds and big money in the market, they're trying to fake you out. They want you to be like, oh, big green candle. I don't want to miss this move. Here we go. And then they reverse it on you and you're toast, right? So we need to identify a base. Now, what's a base? A base is small candle bodies, ideally with wicks on both sides. So if you identify a rally, okay, an initial rally, an initial break of a level, right? You can see here it broke above the 9 and 21 EMA, an initial rally. We are then looking for an immediate base to follow. Now that base, they might be green, they might be blue, but we want to see 1 or 2 candles at least of small candle body size. You guys can see how small these candle bodies are, right? Compared to this, doesn't take a rocket scientist, very easy to see. Small candle bodies, big candle bodies, right? And we see wicks on both sides. And what does that mean? Well, it means that no sellers are really coming in here, no buyers are coming in here. It's just kind of taking a second to rest. Well, if we're looking for any type of continuation move, right? When we enter or we see the initial rally occur, if it was going to reject, we would want to see some type of rejection candlestick pattern. There are rejection candlestick patterns that we actually memorize and teach here at UET. Again, that's part of our Mastermind curriculum, what we do within the community. But we don't see any crazy, it's just 2 base counts. Kind of like, well, this is the seller's chance. If it's going to fake us out, it's right here. And so we want to enter in a base. Now, here's the secret to the whole strategy. Here's the sauce, right? Is the base needs to be happening on what? On decreasing volume. Okay. So again, let's look at these. Well, I don't know what I just did. Sorry about that. We're back. Let's look at these 2 candles here. Okay. That first candle, you see this blue bar of volume way up here. These 2 base candles, what is volume doing over these 2 base candles? It is decreasing. Okay. So now let's think. Let us remember. Okay. Here we go. Jeremy, what do you say? Oh, yes, that's right. If price is dropping or kind of consolidating on decreasing volume, does not mean that there's any selling pressure, right? So we see this initial sell candle here. Well, that was on a really weak volume, okay? And again, even if these were 2 small buy candles or 2 small sell candles, it doesn't matter. We want 2 base type candles. And base candles are, again, small candle bodies, wicks on both sides, happening on lowering volume. Now, there's so many elements to this of why this is such a perfect setup. We get an initial break. We see a base happen on decreasing volume. Okay, there's step 2 of why this is a good idea that price is going to continue to move up. Step 3 is what? Well, even with these small little base candles, price is holding above that key level, right? It's not, it tried to get below. You can see the wick on this candle, it pushed all the way down, and buyers were like, nope, we want to get that back above. Very next candle gets back above. And so we want to enter during this base phase. Essentially, when you see a rally occur and you're able to accurately identify a base occurring, we want to enter as close to what I call our reason for entry as possible. And our reason for entry in this example is breaking this key level. Or if we weren't at a key level, it would be a break and hold above the 9 EMA, right? So we've got the 9 EMA as our reason for entry or this. Now, once we identify that base, do we wait? No. This is where we enter calls. Okay, we enter calls during the base because what's step 3 of the rally base rally? Oh my goodness, can you believe it? The ensuing rally. And what do we get? Exactly that, a rally, right? The rally, the base, the rally. Okay, and it's a beautiful move to the upside after that. So let's say we're identifying this. Let me clean this up a little bit here so when there's not a bunch of nonsense on my screen. Let's clear all that out. Okay, so we see this rally. We identify this base. Let's say you identify the base. Yeah, guys, just you wait. See, we identify the base. We're like, cool. We think price is going to go up. Okay. Not because we think, but because we are using data and a strategy that is proven, right? So you decide to enter calls somewhere in this realm. Okay. Well, perfect. You enter calls right here. Okay. Now, where are you going to take profit and where is your stop loss? On every strategy that we teach here at UET and every strategy that is worth a dang in the stock market, you need to stay in a trade until your reason for entry is invalidated. Okay. So what does that mean? If price were to close below, so let's say this, we enter right here in the very next candle, price starts pushing down, and then let's say it closed right here. So it's a blue candle that closed below the EMA and below the key level, right? If that occurred, then we would know our trade is invalidated. Because again, our whole idea or reason for entering this trade is we're saying, hey, we broke above this level, or we broke above these EMAs. I think it's going to continue to go up. Okay. Well, that's great and fine and dandy, but if price closes back below the EMAs, then our trade idea, hypothesis, our reason for entering is what? It's no longer valid because now price is below what we wanted to enter based off of. So that's where we would exit for a loss, right? That's a structural stop loss. Again, I would love to explain even more, but it's either when a break of structure or your ultimate percent stop loss, right? And we talk about that again in our mastermind program and things that we go over that. Okay, if you have questions, hang on. We're almost through the strategy, then we'll have a Q&A portion, okay? So now, where do we take profit? If we know, cool, reason for entry is that we broke above this key level. So as long as price doesn't close below this key level again, we're chilling. Or again, doesn't have to be a key level. Alex, to answer your question, no, it doesn't have to be on a key level with this strategy. Let's just say you see a break above the EMAs and you start to see that based on lowering volume. Great. Enter because it broke above the EMAs. So in this example, let's say the EMAs. Well, price never closed back below. You can see on this candle, went below, came back up. But let's say you chose to enter right here after this candle, you see a nice base forming. Well, if as long as it doesn't close below, you're good to stay in the trade until when? And this is kind of asking a lot here because I know I've been going fast, but where do we take profit at? Right? If price hasn't hit our stop loss, hasn't closed below our reason for entry, and we're in calls and we're staying above our 9 EMA, things look good, where are we going to exit for profit? You guys remember? Where are we going to exit for profit on any strategy? Yes, the next resistance, the next key level. Exactly. You nailed it. So there's a few. If you're a scalper, kind of like how we are at Uncommon Education, this is the next key level because this is the area that we saw a rejection, right? So what happens? You enter here, right? And again, here's the beauty. If we use the 21 EMA as our stop loss, this is what's going to just be so fun to see. That's how much risk we're risking. And if we hold until price gets up here, this is our reward. Okay. So now here's where trading gets so fun and where working with someone like me is going to help you be profitable very, very quickly. Okay. Here's what's crazy. Okay. So if we duplicate this and we just say, cool, that is, let's see right here, 1, 2, it's going to be really close to 3. Okay. Let's call it 2 3/4, 2.5. Okay. So 2.5 to 1. So that means that you could be wrong twice and right once. Okay. So you could have a 33% win rate. Now think about this for a second. You take 10 trades and you're only right 3 out of those 10 times. If every time you took a trade, this was your reward and this was your risk, you are making money with a 30% win rate. Because again, let's say this is minus 10% and this is plus 30%, okay? Just for the number's sake. Well, if you lose 10%, you lose 10% again, but then the third time you make 30% over those 3 trades with a 30% win rate, you have a net profit of 10%. Crazy, okay? So then imagine if you get good and you're right 5 out of 10 times, which isn't that good, or 6 or 8. We have people, who are right sometimes 7, even 8 times out of 10 over long periods of time with this same what we call reward to risk ratio. That's how you make money consistently in the stock market, okay? So that's the strategy, rally-based rally. Again, ideally we want that rally to break a key level. It can break other key areas, which would be 9 EMAs, can be other support and resistance levels. We then want to identify a base. Now, what is a base? There's 2 elements to the base. Number 1 is we want those candles to be small compared to the rally, and ideally some wicks on both sides, right? That's the lines coming out of the candle body. Number 2 is we want that to be happening on lowering volume. That's the key, right? If this is happening while volume's increasing, we're unsure. We're not, it's like that's, maybe it's about to reverse. We want that base to happen on low volume that shows, hey, this is the seller's chance. They're not doing anything with it. Great. We're going to believe this continue to go. We then also knew that we were in a trend. Okay. So we broke a key level. We identified a base. on decreasing volume. We were in an uptrend, and we stayed above the 9 EMA during that base. That's 5 reasons to believe that the price is going to go up. Isn't that crazy? So anyone who tells you that day trading is gambling, anyone who tells you that it's just guesswork, I'm not trying to be mean to you or to them. They don't know. It's just pure ignorance. It'd be like me saying, yeah, piano can't be played. Pfft, I can't play it, so it can't be played. I don't know how to read music. There's no way that's real. How stupid is that? It's like, obviously, yes, people do. Yes, you can't. Sorry, sir, that you don't know how to do that, but it can be done and people do it very well. Well, guess what? You just saw 5 legitimate, not my hunch, not my feeling, 5 legitimate data-driven elements that tell us right here on this trade, it's a good trade. Now, fine and dandy looking at this because we can spend 25 minutes talking about it. Trading, you're identifying all that and seeing it happen in real time pretty quickly, and you're having to execute. So do you think that takes some time and practice to get good at? Yes, of course, right? You could go to the batting cages at your local state fair and hit, pitches off a machine, but then you're playing in front of a crowd. Pitcher can throw curveball sliders. He throws it hard. Sometimes it's not a perfect strike. Do you think it's going to be different? Of course, right? Of course. Yes, downtrend, you do the exact same, right? If you break below a level and you're below those EMAs, you want that base to stay below those EMAs, but to happen on lowering volume, same thing. Anticipate the next move down to what? The next key level, okay? Whoo, we did it. We got through it, okay? So that's the rally-based rally. Could I spend a lot longer talking about it? Of course. That's what we go into in great detail within our, mastermind. It's not my favorite strategy that we use. It's one of my favorites. My favorite. We've got 4 main strategies at Uncommon Education. An EMA strategy where we just enter and exit based off of the EMAs. We have our rally-based rally. We have a bounce reject, which is how we identify reversals. That's probably my favorite. The BRC is an old school one. We don't do that as frequently. The rally-based rally has kind of taken over the BRC as far as effectiveness goes. And then we have a first candle strategy where we actually enter in that first 5 minutes and have an idea of where a price is going to go. Okay. So quick review, and then whatever questions you guys have, you guys now know what we're looking at here. I want to just kind of go over. You guys learned an unbelievable amount in this last hour. Okay. This last 50 minutes. Okay. You know what these candlesticks are. Green means buyers, blue means sellers. There's candlestick patterns that actually help identify whether it's going to continue going in a direction or not. You know that big candles are, strength. Small candles, or small candle bodies are more kind of weakness, not a lot of strength. And you can identify, hey, there's a lot of rejection right here on these candles. Maybe that's a resistance. So you now know what support and resistance are, right? Which is very cool. You know how to identify trends. You know the basic concept and understanding of EMA levels. And you know the 4 key levels we trade off of here at UET. And you know one of the strategies that I trade with and have traded with professionally for a long time now, okay? Which is very, very cool. So with all that being said, what questions do you guys have for me? I would love to answer any questions you guys have. What questions do you guys have? Enter on candle close for entry, and if you take a stop. Yeah, so very, very quick. We want to enter in that base phase as soon as you identify it's a base on lowering volume. So that might be mid candle, right? Because if mid candle, it's close to the EMAs, which gives you a good reward to risk. But you already know, hey, it's a small base candle. It's happening on lowering volume. You might enter mid candle. Now that's on the rally-based route, right? In this particular example, you need to identify the base that's happening on low volume, and you can enter sometimes mid candle, close candle, doesn't really matter. But for the stop loss, you want to wait for it to close below or hit your ultimate percent stop loss, which comes down to a lot of different factors. Again, we go over here at UET, and then you take profit in the next key level when it touches the next key level. Okay. Can you talk about your Discord? Yeah, our Discord's amazing. We've got thousands of members, active community. I send daily potential plays. Based on these strategies that we teach, so I do the pre-market legwork for you. We live trade every single day with me and 2 other analysts, futures traders, and me, an options trader. The futures traders you can trade options with as well. Member trade review section and so much more. Discord's awesome. As a mastermind member, you get lifetime access to that Discord. Have to ever kept a trade going the whole day? So I'm assuming you say, have you ever kept a trade going? No, because for me, I'm a scalper. So that means I'm only in trades for, seconds to minutes. I only trade for the first hour every day, believe it or not. So from right here, 7:30 until 8:30. That's my trading window. Every single day, I make my living right here. That's all I trade. It's the only time I trade right there. Okay. Can the RBR be played throughout the day or primarily on the beginning? All comes down to volume, right? If there's strength and volume behind a rally, let's use this as an example. Okay. Later in the day, some things have happened. Cool. Boom. We get that big rally occurring. And then what do we see? We see price kind of coming back down to the EMAs. And then what happens? We see the base. Oh, the base. Oh, at a support level. Volume, quick check. Oh my goodness. Boop. Lowering volume. Is this a good place to enter calls? Yes or no? Is this the rally-based rally strategy? Yes or no? What do you think? Yes. And look what happens. Boom. Big rally up. So it doesn't have to happen in the early day. It could happen anytime throughout the day. Do you still use pre-market high, previous day high, low and high on futures? Yes. And we trade different levels on futures as well. Not just those levels. How do you pick what stock you're going to trade? I've been trading the same six stocks every single day for the last 9 years. We teach you how to, identify those. Essentially, each morning I look and I try to find which one's in a trend. If there's trend and volume, I'm going to trade it. For that last trade example, that's a 5 to 10 minute trade. Win is 2.5x. Yep. So a 5 to 10 minute trade, and you're going to make 2.5 times on your winning trade what you're risking on that trade, which is pretty cool. Will this recording be sent out before live trading? I'm not sure. Good question. Look in your email. We'll see if we can get it out. I will contact the powers that be. I'm not the one sending it out. I'll hit up my team. Can this particular strategy only be used at open? Nope. Throughout the day, we already addressed that. Are you only trading AM? Yep. I addressed that. And why? Because people are like, Jeremy, well, why don't you just trade all day? Well, first of all, majority of the big moves happen in the beginning. Majority of big moves happen in the beginning of the day, right? The other big thing is, guess what? I want to be out doing stuff. If I wanted to just sit in front of a screen all day, I'd go get a 9 to 5, right? No, the whole point is so I can go live my life, golf, fish, spend time with friends and family, right? That's my whole deal. Okay. Could you recommend a good brokerage? Yeah, absolutely. That's what we teach you here on Common Education. If you're outside the US, Interactive Brokers here in the US, Charles Schwab, what you're looking at is Thinkorswim. Thinkorswim is Charles Schwab platform. They're the GOAT. They're the best. Not even close. Is there a time where you would go off of the pre-market trends? Yeah, depending on the strategies, for sure. Yeah, depending on the strategies. What time is live trading tomorrow? 7:30 a.m. Mountain Standard Time. E-Trade's fine. I like this better. What's your go-to nymph? You can't go wrong with a Prince nymph. I like a red dart. I like a Paragon. I like a Chironomid. What about Webull? It's okay. Again, active trader with this. One click, you're in a trade. Webull, E-Trade, all these other ones, you have to click confirmation. A lot of different stuff with it. Plus, a cash account is so important. It's how you avoid the $25,000 balance that you have to have. Is you need a cash account. Webull does offer it. I think E-Trade does. I'm not positive. But Thinkorswim is the GOAT for so many reasons. Again, I've been doing it for 9 years. You're just going to have to take my word for it. Is the live trading Zoom link going to be in the Discord? You should get an email for it. Do you use hotkeys? Nope. I just click. I don't use hotkeys. Do you bet on the Broncos tonight? I did not bet on the Broncos tonight. I do like the Broncos. Bo Nix is my backup QB in fantasy. I am 7-2. I am leading and winning my fantasy league, which I'm very proud of. Josh Allen's my starting QB, so it's good stuff. How much do you have to put in the Thinkorswim to trade? You can put in as much as you want. We recommend between 500 and 2,000. Great analogies in explaining. No problem. Utah. I hate BYU deeply. I think they're a terrible, terrible program. I hate BYU so bad. They're the worst. I will still be at work and make it off around 10. How can I see live trade? You will get a Zoom link recording. Go Utes. Hell yeah. I'm super stoked to get started. Hell yeah. Are you limited trades with $500 account? Nope. You set up with the cash account. That's what we go over. Okay, guys. Well, look, apologize for going over again. Looks like we've got most of the questions in. Unbelievable that we got through what we did tonight. And again, I want you guys to be excited about this. I hope you're watching this and it's giving you hope where you're like, hey, you know what? Maybe, just maybe, I've got a way to make some extra money in today's crazy economy. Or you know what? Maybe, just maybe, I see a path to where I don't have to work anymore. Okay. This week, live trading, okay, Jaden, one of my students who took our mastermind, he's making $20,000 a week. $20,000 a week, you guys. 24, 25 years old. Crazy, right? That's all he does. Just trades, lives his life, rides his bike, hangs out, takes his girlfriend to cool exotic places, right? So tomorrow, we are going to live trade. So again, the Zoom link is going to be sent to you. Click on it, join in. You are not going to know what's going on. It's going to be madness. Please, if this is your first exposure, do not trade with me. Do not take a trade. You are nowhere near ready to take a trade, right? But you'll be able to see us implement these things in real time. It's going to be slightly different. It might not be a perfect example of this, but you'll be able to see it happen in real time, which is really, really cool. Um, Guys, this has been fun. It's always fun doing these little, challenges because, it really tests my ability to get things out. And so what I'm telling you guys is if you feel like I've done a good job explaining these things here, imagine how good I am with 8 weeks. Imagine how good I am with our mastermind program, right? Like you guys have a pretty good understanding and hopefully it's been simply explained to you over a few days. Try for a few months, right? Like I can get you where you want to be very, very good. Like I'm a very effective teacher in that sense. And that's why we have so many people who are either full-time or part-time trading with us here at UET. Okay. So, thanks for being here. Look forward to live trading with you guys tomorrow. If you have any interest in our upcoming mastermind program, we have one starting on November 17th. We'll give an exclusive kind of access to you guys if you want. We do discounts, we do in-house financing options. Again, it's less than a semester of college. It's an incredible program, and it's how you can really kind of take those next steps. So I'd love to have some of you in that if you have interest. If not, I really can't wait to see you guys live trading tomorrow. Should be a party. Again, I'm going to be here in my sweet little spot for the night. I'll see you guys in the AM. If you have any other questions, you can reach out on social media, hit us up, let us know. But I'll plan on seeing you guys tomorrow, 7:30 a.m. Mountain Standard Time. The mastermind's just an hour a day. If you want any info, you can book a call with myself, one of our team members. We're happy to give you details on it. I don't want to bore you guys with the details here, but if you want to, hit us up. We'd love to book a call with you and give you a little more info on it. Guys, thanks for being here. It's been an absolute pleasure. Hopefully you enjoyed the sauce today. Again, as I'm going through, I just laugh at how good it is, what we're giving away for free. It's it's crazy. I mean, it's literally the stuff that makes people succeed in this game. So thanks for being here. We'll plan on seeing you guys tomorrow, and hope you guys have a great rest of your night. Go Utes, college football playoff. Come on, let's go. Go Mammoth. Go Jazz. And tonight, yeah, go Broncos. Let's go. Let's go, Bo Nix. Get it done. Okay, thanks for being here, guys. Appreciate you. I'll see you guys tomorrow on the call. Free live trading session. Should be a blast. Talk to you guys tomorrow. Peace.